The end of January saw some truly historic events take place in the market, from silver's rise and crash to a new Fed nominee come onto the scene. Stay tuned as we dig into the details.
Hi, welcome to T-Minus Retirement, a podcast where we help launch your retirement into orbit. I'm Jay Cole.
And I'm Dustin Watts.
And as Dustin mentioned, today we're going to be talking about the craziness of what happened last week in the market, which was the end of January, and also discuss briefly the new Fed chair nominee, Kevin Warsh, and what that potentially could detail going forward when it's regarding the Fed.
Yeah, so some really historic things took place last week, Jay. I don't know that I've ever seen a move in a commodity quite like we've seen in silver over the last month.
Crazy.
Probably the only other craziest thing commodity wise was really when oil was trading negative a couple of years back. I think that was maybe 2020, but we've really seen just a huge move in silver over the last really probably 6 months. But what we're looking at here is just a move over the last month. And, we came into 2026, silver was already ripping higher. At one point here, 3 weeks into 2026, silver was up 60%. And then last Friday, it just collapsed and was down 30% that day. Now, still up 18% for the year. But we just don't see those types of moves in silver or any of these metals really too often. So I thought that was something that we wanted to highlight. This is a view over the last year. As I mentioned, it was having a great year really into summer, and then at the end of the year it just really skyrocketed. And we'll get into some of the reasons there, but that's just parabolic movement right there.
So does that mean I need to go buy silver bars and keep them locked away?
Well, the interesting thing is, if you own silver right now, I know it's very hard to sell it, physical silver, because the people who are dealing in those markets, they're just inundated. They're backlogged. They can't get it to the melting pots quick enough. It's just backlogged. So if you try to go and sell silver, at your local exchange, they're giving you 20-30% less in some cases. So it's just that's a challenge when you have a commodity like that obviously you have to physically store, melt down, do those types of things. But here's a long-term chart. I think it's this one. This goes back to 2006. So this really puts it into perspective, the type of move that we saw. It's been over a decade of silver doing not much, right? Back in 2011, I know this doesn't show the price of silver. It's a little harder to find that type of chart that I could present in this fashion. But silver, I think, peaked out in the 50s during that time. And then, we had a decade and a half of pretty much moving sideways really until 2025. And it just, it went parabolic. That's about as vertical as you can go. But so let's talk about some of the things that led to that move. Now, I know there's a lot of things that kind of go into this, but some of the biggest events that I think led to this rise in silver really started last year, when China, who controls 60% of the refined silver market, they put export controls in place and on strategic materials. So things like rare earth minerals and the like. And essentially, the reason I think that they're doing that is because obviously silver, not only does it have its place in, of course, jewelry and things like that, but a ton of industrial use of silver. Obviously AI data centers and solar panels and electric vehicles and semiconductors and all sorts of stuff use silver. So I don't know why they chose to do it now, but they did. So that, of course, causes some, I think it causes a little bit of like, hey, a little bit of panic, and there's going to be an even more restricted supply if China is going to be putting controls on what can leave the country. Here's a part that as I started digging into this story, I found really interesting. So for every ounce of silver, there's 200 times the amount of future contracts on that.
Wow.
So without getting too complicated, all that does is that really adds to the volatility when you have events, like this take place, because you have only so much silver out in the market. But then when you're putting all of these derivatives on top of that, it's exacerbating those moves, because technically those contracts are for physical delivery. Now, most contracts don't require physical delivery. They don't end up resulting in physical delivery, but at the moment, current silver prices are trading higher than the futures contracts that are out there. So people are requesting physical delivery of the silver. So it's causing this huge spike and huge volatility in the metal. And all those things kind of culminated into this just huge, blow off move. Now, we're not going to know the outcome of that for some time. But, is this just a retracement of some of these gains, and does it continue higher, or was that a blow off top, and maybe we really retrace a lot of this and head to some normal type of at least as of recent years, normal type of level? I mean, Time will tell of that, but if you've been hoarding silver since the $20 mark, I bet you're pretty happy this week. You're not happy about the 30% decline, but it's a lot higher than where you bought it.
Yeah.
So we can kind of move on to the next event. It was the Fed. Who's going to take over the Fed is really a big topic, because we all know Jerome Powell's leaving in May, and of course the Fed is made up of many people, and they all vote to set interest rate policy, and that's ever since we saw inflation in 2022 really take hold. It's really been in the news about where interest rates are at and what the Fed is doing. So now that Jerome Powell's term is over, there was really like three people that were kind of in the final running, and it was kind of a surprise announcement. So it took the market a little bit off guard, but it ended up being that the administration and Trump announced that Kevin Warsh is going to be the nominee, and kind of some of the implications of that. Maybe we can talk first about kind of who he is. So Kevin Warsh has been a Fed board member. He was a board member back in 2006.
Yeah, a long time ago.
Yeah. So from 2006 to 2011. So he was on the board during the financial crisis, and honestly, he was, as I've dug into it, he really was not a fan of the balance sheet expansion, and more on the, let's just say, the fiscally conservative side of the aisle. So I think that caught the market a little bit off guard, but in a positive way, because it was really seen as whoever was going to come into this position. I would say consensus was they were just going to do Trump's bidding, because I think it's no secret that he wants lower rates. So I think that was a sign of some confidence, saying that there's going to be some independence on the Fed if Warsh is in the top seat. And it's looking like his confirmation is likely, albeit there's some questions around the timing of it.
Yeah.
I know. Go ahead.
Yeah, well, I was just going to say too, I don't know if people get the idea that if Warsh is nominated, that rates will automatically, they'll be able to do all the rate cuts that they want.
Yeah.
If that's not the case, it's still going to happen like how it normally does, where there is a board of 12 members and they vote on these rate cuts. And I believe it's a majority. So, if 10 vote yes on a cut and 2 vote no, then they're still going to go ahead with the cut because that's the majority. So
Right.
while Warsh might have maybe a little bit more influence on getting certain members to do cuts, it doesn't automatically guarantee that we're going to be seeing cuts for sure, within this year or so.
Right. And sorry, I left that silver chart up there a little long, but this is a quick chart from the Fed, basically showing what the implied projections are for rate cuts. So to your point, yeah, he's the spokesperson and he's the one that goes out and does the press conference, but all these other board members vote on, including Warsh, if he's confirmed, but they vote on what interest rate policy will be. And consensus really hasn't changed. It's still, the consensus is that there's going to be 2 rate cuts this year, but after that, it looks like the rate cut path, projection is slowing. So,
Yeah.
and we saw honestly some positive implications of that once he was announced. We had bonds that were a little longer term bonds that were concerned about government overspending and growth and those types of things. They actually, went up a little bit with the notion that, hey, maybe we have somebody that's going to be leading the Fed who is more conservative, fiscally conservative. So, of course, we'll see how that plays out. He's not in the seat for sure, but I think that was a little bit of a surprise because a couple months ago it was looking like, hey, it was going to be someone just completely going to lower rates to 0 just because that's what the president wants. But again, there's that aspect. It's a committee, right?
Yeah.
They don't just get to do what they want.
Right.
Stock implications of that. I mean, we've been seeing really since that was announced, the rotation in the market of companies that will do better with lower rates have been the flavor of the year so far in the first month. Not sure how that's going to transition here. If we don't get the rate cuts that we were expecting, I would imagine that will pull back a little bit and maybe go back to some of the things that were loved in 2025. But so far this year, it's really been pretty much anything but tech, which honestly, I love to see it because as you know, Jay, we can't have a portfolio of 100% tech all the time.
Right. Yeah.
While it's a huge component of a portfolio just because it's the largest sector in the U.S., we have a lot of other things in the portfolio that are getting a lot of love, which is really nice to see because it's long overdue. And interest rate policy will play into that a little bit as well. So I think we're going to have an exciting year on our hands.
I think so too.
Well, we hope that you enjoyed the video and recapping some of the historic events that took place last week. If you did, please like and subscribe. We look forward to seeing you in the next video. Take care.